Hello everyone, this is Calvin Russell, CEO and founder of 850 Club Credit Consultation. Hope everyone's doing well today. Today we're going to talk about a major change that we've all been waiting for, at least a big step in the right direction. All right, let's go straight into it. So for those who don't know, there was some news that was announced on, actually it came out Friday, but the official acceptance of everything, actually happened on yesterday. So that's why we're doing this video on today. So let's take a step back to Friday. Friday, it was announced that FHA guidelines have now changed the way that they calculate student loans. So what does that mean? Usually, well, before Friday, essentially, if you had student loans, traditionally, if you either went with an FHA loan or a conventional loan. Now, there's some other loans that's in between, but let's just keep it really simple. Essentially, if you went with FHA, they calculated your student loan payments at a higher percentage, which you would still be able to get approved, but it will most definitely hinder a lot of your buying power. Essentially, the easiest way to break this down is your income had to be essentially either more or the same as your student loans. It didn't have to be, but based on my own algorithm, if, like, let's say for example, your student loans were 100,000, if your income was not at least about 80% of what your student loans were, you were going to have a difficult time getting the pre-approval amount that you wanted. I'll give you a perfect example. There was a client that we had, and I can't wait to give her the news today actually. But there's a client that we have. Her income was about 40,000, and her student loans were about 50,000. So still about 80%, right? The thing is that her because of her car note being a little bit over $550, her pre-approval amount was about 115. Okay, so now of course every area is a little bit different, so 115 could probably work where you live, but in Chicago and nearby suburb areas, that's not going to work. Now you can find some things for sure, but what she was looking for was not going to be in that particular budget, even though she could afford it because she had a business on the side that she didn't file taxes for, just because the business was brand new. So either way, now that same scenario will be as if she had $25,000 of student loans, which of course is going to improve her buying power, which is going to increase the amount of inventory she's going to have access to. Now, before Friday, she could have still done that. The difference was you would have to qualify for a conventional. And as of lately, it's been kind of difficult for a lot of people to qualify for a conventional. Conventional is not just your credit score, which, by the way, you can get a conventional loan as low as about 620 with some lenders. But usually the approval really starts around about 680. We've seen some 650s get approved, but then DTI plays a role. A lot of factors play a role, and it's a computer-based system like everything else, right? But that said, there were ways to kind of get around certain things, but it was really more difficult. So a person essentially either had to work with their pre-approval amount that they were given. They could probably change lenders to see if they can squeeze a few more coins out of that and get a slightly higher, pre-approval amount. Or another way to do it was to get a co-signer. So again, not a lot of options there. But now, essentially, it's just like having an additional buying power, just because they are counting a lower percentage of what your student loans are. Now, you must be on a payment plan. If you are not on a payment plan, then they will take a certain percentage of that payment plan. And just so we're clear, these are not Illinois guidelines. These are national guidelines. So wherever you are, whatever state you're in, you can most definitely get approved. Now, again, getting approved was not necessarily the problem. It was more so how much you were going to get pre-approved for, because it was almost like people were being penalized for going to college. And, and let's be honest, a lot of people, they were on payment plans and things of that sort, but it weighed heavily, just the total balance weighed heavily on their buying power. So super excited about this. Because now essentially you're going to get the buying power that you would have gotten prior to Friday. You had to be conventional to get that buying power increase. Now, as of yesterday, you most definitely can go ahead and get that pre-approval. So there's three types of people that's watching this. One person hasn't started the buying process in any way, shape, or form. Well, congratulations. You most definitely can still start the buying process. You won't necessarily see a change, because had you had your pre-approval prior to Friday and then redid it with the new changes, then of course you will see the increase. So of course, now is the time to get off the fence. We don't know how long this is going to last either. I don't know if it's just a flash in the pan. We don't know, because as the economy changes, right? Excuse me. We're coming out of, COVID, and, things are starting to open back up, and, things are starting to change a little bit, so the climate is starting to change. So as that starts to change, so do regulations. So we don't know how long this is going to be in play, but you most definitely want to take part into this. Another sidebar is the fact that, remember when Biden was talking about kind of getting rid of student loans, or coming up with some type of forgiveness and things of that sort. The problem is that that's not really going to happen. Well, I don't think, because now it seems like everything is adjusting around the student loan spectrum. So instead of actually forgiving those loans, they're saying, okay, well, let's go ahead and start reducing the percentage of what we look at this for home ownership, because that was one of the biggest factors outside of obviously people paying their student loans. So again, just kind of pay attention to what's going on here. All right. So getting back on track. One person, they've never started the process. You won't really see a difference because you never saw what it was prior to Friday. Another type of person is number two, where you already have your pre-approval. You had it prior to Friday, but you have student loans, of course. And there is not that student loans are a big deal, but you most definitely want to go back to your lender and say, hey, with these new guideline changes, how does that affect my buying power? So you most definitely want to get with them and find out what your new buying power is going to be, okay? Especially if you have difficulty with the inventory, but if you haven't had any difficulty finding anything, then of course you're just perfectly fine. And then you have the third type of person. This is probably the pissed off person, right? Because they're already under contract, they've made compromises to try to make it work, and here we are now, trying to make this whole thing fly through. And but again, things happen. It's not the end of the world. Of course, you may talk with your agent if you're thinking about pulling out of this. Talk to your lender to find out if it's even worth doing all of that, because you worked so hard to get the deal under contract in the first place. So if I were you, I wouldn't change anything. Just chalk it up. Okay. But again, that's up to you. You are an adult. You do whatever you feel is best. All right. So of course, with this, I most definitely wanted to get you guys this information as soon as possible, as soon as everything was solidified. So if you like this video, like it, you want to share it. And as always, be sure to subscribe, as we have nothing but great content on the way. Thank you all so much. Have a great day.